And we're off to Button Moon and we follow Mr. Spoon Button Moon. Do you think you're cut out to be a trader? Well, let's have a little chat about it. I'm going to grab a coffee, I'm going to show you a statement and just tell you a little bit about the experiences, what it really is to be a trader.
Wait. Matron, take them away. Oh.
And a warm welcome to one and all. And if this is your first time here, I am the big fella. That is the Scruffy Trader. And what I'm trying to do is put trading in the real world. Maybe show you a trick or two along the way. So if that sounds good, do take a second to hit that little subscribe button. Genuinely helps, and if you see value in any of the videos, do crack a like to motivate me to do more. So what is it we're doing today? Well, today, apart from making the coffee, because we all know Scruffy likes a coffee, we're going to have a chat about real world trading and really about the journey I've just been on passing an evaluation. Now, I've passed this evaluation a number of times here. So that was the first 3 times that I've ever done this, and I did it because of the group that I run, so it's a kind of little salute to all of those guys. I trade for a living. Now some of them sort of see that and they want to emulate it, but they don't have the funds in order to trade at the size that I trade. But what you've got to remember is I've traded a long time and I've built that pot up over a number of years. Now with a prop fund, you can accelerate that using somebody else's money.
No way!
And that is kind of the story of today. Now there are 2 ways to go into market, and I'll show you both of them in a second when I go up into the study. But you either go down the route of a broker with your own funds or a prop. But today is mainly about prop, because I hit a milestone today. So let's go in the living room, we'll have a little chat. I'll go up into the study and I'll show you a good broker and a way to compound your funds. But then I'll also show you the prop account that I have just done. I'll even show you the statement in real time, live on a live website, so you can see all the deal tickets and the evaluation process. It's not many people will show you a true statement, but I will. Why? Because it's my job and I have nothing to hide. And I don't sell courses, unlike some of the clowns that's on the front of my videos. Trust me, I see them. I see them all the time. And some of them are alright. The one, Paul Tudor Jones, trading without emotion. Yeah, right.
Oh, make it stop!
And the other one, if you're using these stupid candlestick charts, please stop. I am the only true trader. But horses for courses. Let's have a chat. Okay guys, so let's have a little chat about trading in the form of an analogy. And then when I've done this for a minute or so, I'll drop up and I'll show you a live statement. Okay, so trading is portrayed heavily as get rich quick, and that you have to do very little in order to get those riches. In other words, they tell you this fazagi about 3-to-1 ratios and you only have to win 4 times out of 10 and you're still going to make money. Well, that's the worst thing you could possibly hear, because that's basically saying you're rubbish, but if you gamble, you're going to be okay. The problem with that sort of sales pitch is what they don't tell you is you need a decent size account to start with. Every single one of those trades has to be identical. So it's the same stop, same target, same conditions on the chart. Well, that doesn't happen very often. But also the psychology behind your trading as well. Because if you're going 4 out of 10 and you've just had sort of 5, 6 losses on the belt, boom, 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 have you got the mental strength to pull the trigger on the next one? The chances is no. And why? It comes down to experience. And experience is what will make you a good trader or a bad trader. And that's just a cold hard fact. You are not going to take an hour's course or watch a couple of YouTube videos and then become a 6-figure trader. It's just not happening. So are there ways that you can kind of gain the experience and work towards it? Well, of course there is. You can sort of paper trade, that can get you going. Or you could trade micro, where you only trade in a fraction of money, but it helps you with the emotional concept. Because when you've got even just 10p a point on the table, the way you look at the chart is completely different. So that can help you. And then as you get better, you're going to want to be the trader that you dream of or what you've seen in the adverts. And then you either have to use your own funds or prop funds. And the analogy that I'm going to use is that of you've been through your working life. In other words, you've set out to do whatever. And you want to open up your own shop. Because the skill set you've acquired, you know you're good at what you do. All right? And it could be anything. You could be a florist, a potter, a baker, whatever you want. But you want to open your own shop. What's the first stumbling block you have? Well, it takes money to make money. And if you haven't got any, how are you going to get the retail premises in the first place? It's going to be difficult unless somebody helps you. Now, there ain't that many kind people out there that are going to stump up a colossal amount of money. So you have to do it on your own. So what can you do? How can you get your retail shop with limited funds? Well, you could rent space in an established shop. Just a little corner, you know. And then what you can do is you can use the established footfall to increase your sales. You've already got limited costs because you're not going to be paying for a full retail premises. And trust me, setting one of those up from scratch, and I know because I've done it, costs a fortune because you've got to kit it out. You've got to put bonds down on electricity, gas, all this sort of stuff. It does eat into your funds considerably. So just rent the corner of a shop. You've got a brand name that you can trade off. You've got established footfall you can trade off. And you've got a mentor on hand of sorts that if you are stuck, you can ask, because you should always go into things wide open and as apprenticeships, as partners, you know. So why not, you know, lean on their experience, shall we say. So if you do hit a stumbling block, you've got somebody you can bounce off. Simple stuff. Then what can you do? Well, as your sales are coming in, you can put a little bit of it to one side and save it up. And what you've done over time is you're getting paid for renting the space, etc. But those little bits you put to one side can build up a pot that will enable you to buy your own retail premises. Now that's just a vague analogy of how to look at things. And it's how trading your own funds versus prop funds works to a degree. Because if you're going to trade your own funds, it's going to be small. So your returns are going to be small. But what if you had those small funds and you put them into a prop fund and they gave you 10 times what you're putting in, or however much? I'll show you in just a second. that is a way forward. So let me go in the office and I'll kind of try and clarify that. I'll show you going down the route of your own funds, and I'll quickly show you how you can compound it. Then I'll show you going down the route of a prop fund, and I'll show you a live statement.
Well, we're waiting.
Okay guys, so I'm up in my study and I'm going to fire my screens up in just a second and show you platform to go into market on your own, and then I'm going to go through platform via prop, but I'm also going to show you my statement and how I got to achieve it in the first place. Okay, I can't be any fairer than that. So why would you do it on your own? Why would you want to work for yourself? Normally you don't want somebody looking over your shoulder. You just want to do your own thing as and when. And as I was alluding to in that little analogy, maybe badly, it takes money to make money, but you can build from small beginnings. I've done it. You know, when my company collapsed, I started with a little under £600. And all right, it took me 2 years to build that pot up. But now I'm reaping the rewards 5 years later. I do what I want, when I want, how I want. That's what trading gives me. It gives me freedom. I mightn't be a money millionaire, but I am a time millionaire. I do what I want when I want. That said, you need to start somewhere. So where do you start? You either need your broker or your prop. So let me just show you a preferred broker. The reason why I like this one is very simple. I trust them and they use the MT5 platform, which I like, and WebTrader. I like that as well. But this one aligns perfectly with the prop I'm going to show you. So it goes back to the analogy of having a little corner of a shop that you can build to fund your own. This is the route. Now, why BlackBull? Why do I like BlackBull? Well, I pulled it up because they've made a slight change. You don't have to put any money into it at all. You can open it up as a micro. So you could just put 20 quid into it and then trade pennies using the leverage. Now, be very careful with leverage. Leverage is there in order to open up a position rather than increase your position size. Be very careful with your position size. Okay? Don't think, well, I can leverage it up and turn my small amount into a big amount. No, because that big amount inevitably, your account can't take it. Let's put it that way. All right. But it's a useful tool to have because it enables you to look at multiple markets. You can put into it what you like. You put 50 quid in, 1,000 quid, whatever, you know. Spreads from zero. Well, it don't get any cheaper than that. So that's why I recommend this. Okay. And if you drop a decent amount of money into it, trade over 5 lots, I'll give you some of my time in a one-to-one. All right. But how do you compound up if you've only got a couple hundred quid? Well, just put it into a simple spreadsheet. You know, I work with spreadsheets all the time. You don't have to do it as complicated as this. I filter markets down into what I'm going to trade. And if I am going to trade, I'll trade twice a day, one asset. But I'll filter the assets into that one. Keeps me consistent, keeps me focused. But I still need money in order to get what I want. So if that's the case, I have to compound it. So if I'm starting with a small balance of 500, I need to work my way up to, well, whatever level I want. If I want 5,000, then I just have to work it out. So if I'm saying that I want 5,000 quid in this sort of setup that I've got here, it's going to take me 2 months just to get there. And that's assuming I win every trade. Okay? It's not as simple as that. That is the perfect storm. All right. But once I get my 5,000, and I've used this to compound up. There are videos on how this spreadsheet works, by the way, and how compounding works. I'm just giving you a quick snapshot here. But once you've got 5,000 in your account, you've got a chance at a wage. You genuinely do. And then you can look at sort of something like this, because you can turn your 5,000 easily into sort of 10,000 in a year. But as I was alluding to many times, the higher you go up the tree, the harder it becomes. So you don't want to be looking to double your accounts anymore. You want to be looking to reduce the exposure. Again, I've gone through that as well. But let's just say you've built your account up and you want a certain amount of money per month or per year. So I don't know. Say you want 15 grand a year. All right, and you build everything up. You need an account that can safely open up a said position. All right, so your journaling is important. You need to know what your win rate is. You need to know how many times your strategy wins. Now, mine, it's almost, well, I'm running at over 90%. I'll show you that in just a second. And I have been for a long time. But the lowest I've dropped to is low 80s. You know, I'm averaging 85 to 92, and I've been like that for years. You know, I haven't lost a year in 7 years, and I haven't lost a month in 3 years, because I'm meticulous in what I do. All right, I never chase the market. Let's just say you can do 20 pips once a day, just once. You can do it. I know you can do it because I've proved it. What is my bid size? Well, that is there. You need to do 1 trade a day at 20 pips at £3.6 once. A 5,000 account will easily do that. Where you fail is when you try to go, well, I'll go back to market and I'll have another trade. And then I'll have another trade. No. Wait. Trade once at the right size, and it'll give you what you want. Now, you might want more than that. You know, 5,000, it's a stretch, but you can maybe do a 5 or a point on it. All right. So let's have a look. There you go. £5.42 at 20 pips will give you 25 grand a year doing it once. Not twice, not 3 times, once. So trading is about planning, not being in the market. All right. So that's how you would do it with yourself, with your own funds. What about a prop? Well, I've been to market a few times, and this is the account that they've just given me. It's 50,000 full balance. I've already got profit in it, 672, and there's my profit payout, which will activate in 14 days, I think it is. Yeah, 14 days, end of the month. That'll be ready for me to draw out, plus whatever else I put into it. But how did I get there? That's what you want to see. You want to see the statement, and you want to see it live. Okay. Well, that's what we're going to do then. This is a live statement. As you can see, it is a website moving up and down. It ain't photoshopped, and it ain't on a phone that can be manipulated. Because when you see anybody showing it on a phone, 9 times out of 10, it's not real. It's well, it's just not live. It's just not real. So, what have we done? I started this on the where are we at? Put that there. Sure, I started before then. Did I just go all the way back? Oh, I did. Yeah, 12th. I started this on the 12th of July. It's now 9th of August, so less than a month. on the 50,000 account, and I've grown that by £22,500. The winning factor, or the performance factor that they look at, which shows that the account is sustainable and profitable, is 3.7. The benchmark is 2. So that's well above where I need to be. And the winning factor, in other words, the amount of trades taken that fall under that criteria, is 93. And I only needed 30. How many trades did I take? I took 100. So out of 100 trades, 93 of them were profitable and sustainable. 2 of them were a loss, and the other 5, well, they're here. They didn't quite hit this threshold. In other words, what happened was I recognized the conditions and I killed the trades off, even though they were in profit. Because that's the other thing. Sometimes when you're wrong, you're just wrong. Just get out. Don't wing it. So there's the stats. My lot sizes, my average is 1.7. So that's in line with my own wages. And what we're going to show you now is all of the deal tickets. Now, I'm not sure whether, well, actually you will. If I hold it there, you'll be able to see the top ones. And then you can see all the commissions, all the profits, all the way down, which should come to number 1. Right? That is about as fair as I can get, and I've now been awarded. The idea of this video is really to inspire you that it can be done. Now, the 5%ers pay me very well off my own work every month because I trade accounts for them. And every month they pay me. Without fail, the money is there. So do I trust them? Wholeheartedly. You know? And if you're interested and you want to try them, there is a discount link in the description below and you'll get 5% off. But I guess as I wind this up, I just want to get you to ask yourself some simple questions. And always have them binary. You know? So when you come to the market each morning, ask yourself, am I prepared? Yes or no? If you're not prepared, sit back and prepare what you're going to do for the day. So that's look at the market, mark it up, understand which time frame you're interested in looking at. Look at the conditions, what the market is. Can you see a trend? Can you see a range? Can you see chop? You know, have you seen this in your journal prior? If you have, the journal will then help you with the conditions that you're looking at, and you can apply the right tool for the right job. Okay. Next question. Do you have the tool for the job? Yes or no? So if you only ever trade range-bound markets and it's trending, then you have to sit out because you haven't got the trend-based tool for the job, or vice versa. Third question. Once you've marked your chart and you've put in your stop wherever it has to be, because there's no such thing as a tight stop or a fixed stop. Stop has to be where a stop has to be. Personally, I use 2 structure points. Am I happy with the cost of this trade? That is from the point of entry to the point of stop. How much will this cost me physically? Not in points, not in pips or anything like that. Money. Am I happy with that cost? Yes or no? If it is no, half the position size. And then look at it again and see how much it costs. If you are still saying no, half it again till you are happy with that cost. What that does is controls the mind, controls the psyche, because it means that you're going to look at it calm. You're not going to look at it frightened, thinking you're losing. It's the worst way you can do it. And you're not losing. You are investing X amount of money to gain X amount of money. The two of them are separate. Then you look at your entry point. Am I happy to enter here? Yes or no? If the answer is yes, go for it. If the answer is no, why? You know, why you're not happy? Is it pushing a level? Is it pushing an outer Bollinger Band? Is it about to touch a moving average? Anything. You know, is it at the end of 6 candles going in the same direction? All this sort of thing. Only enter when you're happy. Yes. Then place your target in. Is my target in the correct place? Yes or no? And does it have free air? And free air means no roadblocks between your target and your entry point. So if you've got a target that's 50 pips away and there's a solid level run straight through the middle of it, there's not a high probability that it could bounce on that level. So you have to be sure where your target is. And these will help you. So there you go. A few thoughts from the big fella. I can't make it any clearer than I do. And if you're stuck, do drop in the comments. I do enjoy a dialogue with you guys. And if you want to see how I actually do trade fully, drop down in the Scruffy Squad and come and enjoy the merriment. And I'll show you. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.